The global stock market, once seen as a steady engine of wealth, is now behaving more like a stormy ocean, and at the center of this turbulence stand the giants of technology. Companies like Apple and Nvidia, once symbols of unstoppable growth, are now experiencing sharp swings that are making investors nervous. One day, billions are gained. The next, billions vanish and no one seems completely sure why. For years, tech stocks were the golden ticket. Investors poured money into companies driving innovation in smartphones, artificial intelligence, cloud computing, and graphics processing. Apple dominated consumer tech with its ecosystem, while Nvidia became the backbone of AI, powering everything from gaming to advanced machine learning. But now that dominance is being tested, prices are no longer climbing in a straight line. Instead, they're zigzagging like lightning across the sky. The reasons are complex, but they all connect like threads in a tangled web. Central banks in the US and Europe are keeping interest rates higher for longer. This makes borrowing expensive, and suddenly, future tech profits don't look as attractive as they once did. Investors begin to rethink, and when investors rethink, markets react. Artificial intelligence is the hottest trend in the world right now. But here's the twist. The expectations are sky high. Companies like Nvidia are benefiting massively from AI demand, but investors are starting to ask a dangerous question. Are these valuations justified? When hype meets doubt, volatility is born. From geopolitical tensions to slowing economic growth, the world economy is sending mixed signals, and markets hate uncertainty more than anything. So even strong companies like Apple are not immune. Their stock prices swing not just based on performance, but on global fear. Markets are not just numbers, they are emotions. Greed pushes prices higher. Fear pulls them down. Right now, both emotions are fighting at full strength. One moment, investors rush in, afraid of missing out. Next, they pull back, afraid of losing everything. This emotional tug-of-war is amplifying every movement. This isn't just a story for Wall Street. It affects retirement funds, tech employees with stock options, everyday investors, even global economies. When tech stocks shake, the ripple spreads everywhere. Because tech companies are not just businesses anymore. They are pillars of the modern economy. Apple remains one of the most valuable companies in the world, but even Apple is facing pressure. Slower iPhone demand in some markets, rising competition, and questions about future innovation. All of this is making investors cautious. So even small news can trigger big price movements. Nvidia is a different story. It's riding the AI wave like a rocket. Demand for its chips is exploding, but that success comes with a catch. Expectations are now extremely high, and when expectations are high, even great results may not be enough. That's why its stock is swinging so sharply. This volatility is not necessarily a sign of collapse. In fact, it may be a sign of transition. The tech industry is entering a new phase. AI is reshaping business models, regulations are increasing, competition is intensifying, and markets are trying to figure out what all of this means. Instead of panicking, experienced investors are adapting. They are diversifying portfolios, looking at long-term fundamentals, ignoring short-term noise, because history shows one thing clearly. Markets may shake in the short term, but strong companies often survive and grow. Let's be clear. Not every tech company will win. Some are overvalued, some are overhyped, and some may not survive the next phase. Volatility is the market's way of separating reality from illusion. The recent swings in tech stocks are not random. They are happening because interest rates are high, AI expectations are being tested, global uncertainty is rising. This combination has created a perfect storm for volatility. At its core, this situation is about adjustment. For years, tech stocks grew rapidly with low interest rates and high optimism. Now the environment has changed. Money is more expensive, expectations are higher, and risks are clearer. So the market is recalibrating, trying to find the true value of these companies. The question is no longer whether tech stocks will dominate, but how will they survive this storm, and which giants will still be standing when the clouds finally clear. And for more sharp, real, and powerful global news insights like this, visit our website, https://globalnewssignal.com. The link is pinned in the first comment.